Welcome. Let me hit the marker. Okay, so it is a Tuesday, the 9th of February, 2021. Today we'll cover gold, oil, Bitcoin, euro, dollar, pound, yen. I'll answer your questions. You know what? I didn't go through the calendar yesterday, so maybe we can go through the calendar, look at event risk coming up in the next week or so. Thank you for being here. Thank you for being part of the Forex community of 17,000 traders around the world. And thank you for the loyalty and respect you show me every day. Let's go. All right, hang on. I've got to get all these different pages open. What's going on? There's so much going on. Hang on. There's certain things I guess I can't change in the middle of a stream. I guess that makes sense. Hang on. I guess I could try to say it at the same time. Let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, it's not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Actually, you know what? I had it set just properly. I see what's going on. All right, cool. Hey, my name is Wayne. Nice to meet you. I'm a currency trader. Been doing this close to 20 years. I was just recognizing on the FX Bootcamp YouTube channel that I still have that interview I did with Fox News, and it says 12 years ago. And I remember at that point I had been coaching for quite some time already. So it's just amazing what's happened over the last 20 years. So anyways, thank you for being here every day and being part of my life. I appreciate you. You make me want to be a better trader. All right, so my name is Wayne McDonald, and welcome. Should I say it again? Well, some days I forget to even introduce myself. So anyways, cool. So I am here because you are the boss. That means you can ask questions, and I will do my best to answer them. Now, there is quite a few people in the chat, so it's difficult for me to answer every single question because it takes you a few seconds to answer, and it takes me many minutes. Or it takes you a few seconds to ask. It takes me many minutes to answer, so I go back and forth, back and forth, back and forth. But anyways, technical analysis, fundamental analysis, trader psychology, those are the three subject matters we generally cover. But guess what? The technical analysis is pretty straightforward, so I can teach you those skills. Fundamentals take a little extra work, but what we're trying to do is line up your bias with market conditions. So you might be fundamentally bearish and the market is technically bullish, and therefore you should be extremely neutral. So anyways, we'll work on that. The goal here today on Tuesday is to plan Wednesday. And also to take a look at where we are in the week, because typically by Wednesday and Thursday, we're done our weekly plans, which we created last week. So we're always forward looking. I highly recommend that you take notes. This is a complicated thing, the thing we call Forex. It's quite a complicated thing. So every single day, maybe you can grab one small piece of the puzzle and document what you learned. What was that small piece? How do you think it was helpful to you? Was it new? Was it different? Was it a reminder? And I would take those notes now while we're in the live stream. And then when the live stream's over and the video is up, document that in the comment section below the video so that you can search. Imagine you're doing this for selfish reasons. You might be thinking, oh man, you're just doing this for YouTube. I don't know if it makes a difference actually, but for you it will make a difference. Imagine now you could search in YouTube and you search your comments in the back office of your YouTube account, right? And now you can search your comments and find specific videos where you learn specific things. So if we covered scalping today, you're like, hey, what was that video? What day was that video that Wayne talked about scalping? And you just search your comments. You're like, oh, there it is. Boom. And you can watch it. So do it for selfish reasons, which is totally fine. I'd like to thank Traders Way for being part of our community as well. As a Forex trader, you're going to need a broker. Ideally, one that can execute trades. Yeah, that's good. One that doesn't trade against you. Well, that's common sense. One that has low or competitive fees. That makes sense, right? One that actually pays you swap instead of double charging you on swaps. But ultimately, you also have to have an execution partner for your business that you trust. And so think about Traders Way that's trying to earn your loyalty and respect before you even open an account, and values your education because they actually want you to succeed, because they feel if you're a successful, profitable, consistent, non-gambling trader, that you're actually going to be a better client. So they're like, yeah, if that makes sense to you, then maybe you can give them an opportunity to earn your loyalty and respect by opening a demo account at tradersway.com. Think about it. You're going to need to make the decision. Why don't you start with that one? Okay. Oh, that's funny, Daniel. Making a whole TXT and putting it on one video. That'd be interesting. Morning, Meta. Morning, Master Trader. Eric B and LL Well Hell. Okay, so here we are. Dollar a week. Yay! That started right after NFP. Yen has gained some strength. Ooh. But remember, we were hitting some targets yesterday, so we'll follow up on that technically. Morning, Mohit. Swiss franc has regained some strength. So we got some flip-flop here, huh? Yen used to be weak. Swissy used to be weak. Dollar used to be strong, but now it's all the opposite. But, you know, Aussie's about the same. Euro is just the opposite of dollar. CAD's a little off. Kiwi's a little off. Pound is a little off. So actually it looks like a lot of things are pretty mediocre. Aussie was really good, has lost a little bit. Mediocre yesterday on the pound, mediocre today. Kiwi was better off. Now it's mediocre. Euro's mediocre. CAD is mediocre. All right. So be careful today. Can you see that? So one of the things we covered yesterday was how to do relative strength exercises so that you can very quickly and easily find currency pairs to match, strong versus weak, not strong versus mediocre, or strong versus strong, right? Like you don't want that. You just literally want strong versus weak. And so I look at here and yeah, okay, Aussie's probably the strongest, but there's mediocrity, right? Which means if you traded pound Kiwi, for example, you couldn't predict up or down, nor would you have much volatility or a range. So pucker up, tighten up a little bit, huh? Don't be so loosey-goosey. So let's start then. We'll take quickly a look at commodities. You're probably stinking Bitcoin and all that kind of stuff. We'll start with WTI, my oh my WTI. Still carrying out last week's trade plan. Kicked off the 4-hour 21 with a pivot below us, but we are at target at 58. Okay, so technical analysis will tell you this can go up or down. However, it's very, very, very likely, based on what happened in the period before, that the vast majority of the profit to the upside is done, which means we could start moving into some sideways or maybe retracement all the way back down to 56, let's say. And therefore, here it is Tuesday, and you're already at target. So many people will know if you're out of position kicking off the 4-hour, this is a daily, but kicking off the 4-hour, what happens is it retraces back. Now on a monthly, same thing, right? Where on the first of the month, it was out of position as a bull. And then by here it is the 9th, which I would say is early, right? 15th would be middle and such. So early in the month, hitting 58 as target the vast majority of the likely profit that this asset class is likely to produce in the month of February has already happened. Okay? The horse isn't dead, but it's sick. You got a sick horse. It don't look so good. Okay? So bear that in mind. Okay. Now, Brent, we were watching, and it hit 60 something, and now has collapsed back down to 60, right? So it's through 60, up and back and around. And, okay, a little bit topish. If you're still a bull, you probably want to kick it off the 4-hour 21. Okay, so if you're still a bull, did I say bear? If you're still a bull, you probably want to kick it off the 4-hour 21. Okay. Okay. And see if you can get to your target. Target on this one aggressively is much closer to, we'll call it 63. So this might drop down to 60, and then you take it $3 up and then exit around there. Let's do some Goldie. Gold over here. Pa-chow, pa-chow, pa-chow. Whoa, whoa, whoa. What's going on here? What's going on? Nothing's right on board. All right. Okay. This was the prediction way back 2 weeks ago, I guess, or whatever that was. That we'd have an up, a down, an up, a down, an up, a down, slowly working our way north. What we actually got was pretty good. I think it's not bad, right? It's not bad, right? Wayne, will the Fed be more driven by the inflation rate for the next years? They actually specifically addressed that 6 months ago. Okay, so watch yesterday's video where I talk about the output gap, and then find the video from, a month or two ago where I specifically outline the output gap and the Fed's overshoot comments. But that could have been 2 months ago, it could have been 4 months ago. Honestly, I don't remember. Okay, but way back before it was even the news, like weeks and 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 weeks ago, I already covered that because I wasn't sure when Jay Powell says, oh, well, we're going to overshoot. And I'm like, I bet you people don't understand what that means. So I did a whole lesson on that, probably 20 to 30 minute lesson on what that means. Okay. So what that means, if you pay Daniel $5, he'll tell you what video it was. Oh, Meta, if the monthly is compressed, if the monthly is compressed, I see. Can you give me the specific one, Meta? Do you have one? It's easy. See, weekly is easier because it'll update. Monthly is more difficult. There we go. Free market, right? Master doing it for $1. Master. All right. Do you have one? If the monthly pivot is compressed, where do you say we go for profit? No. Okay. That's a more difficult one. Let me try to get that. First of all, I'm thinking August would do that. I don't know if we can even do this here. Let's change our template here. Position trading bullish. Okay. So August probably, September. See, September is probably collapsed. All right, so here we go. Great. Isn't that nice? So here's your collapsed month. Okay. It says, August. Okay. Which means in August, we created the pivot points that said, go for here. So I don't know if that is even. So my initial answer was going to be you use the next one, and it actually worked out here pretty well. I don't know. See, my concern with that is when you're here, let's say early in the month. Let's put it here. Let's say it's early in the month. It's too early. Like this wouldn't have been that helpful. But my instinct was to tell you to use the next month. So it really depends on how early in the month it is. You typically go for the next more aggressive trade. None of this looks great. Let's try to look at like maybe Aussie yen. It's probably a better one on Aussie yen. Let's just pick Aussie yen. What's going on? Nothing's right. I'm torn. Okay, and I got to change the template here. Position trading bullish. And let's try to define this. Oops. May, June, July, August. Here's your SEP. So it's sort of the same thing. So that was my instinct, and it looks like it's probably the best answer. Okay, it's the next sort of target area. It tends to not happen as well as it does on weeklies. All right, because the weeklies update more quickly. Obviously, it updates in 7 days than 31 days. But you typically go out and use the next target when you're here. Okay, this came down even further. Okay, before the up, so maybe it's still not a great example, but you use the next pivots. Okay, because the compression will show you that you'll undershoot, right? So you'll have to use the next ones. And the reason I sort of hesitate on that, because if it's early in the month, then they're not accurate either, right? So it's much more weekly. Yeah, so, I mean, again, my instinct was to say use the next ones, and I think that is right, because now thinking about it even more, if I know I don't want to get out of the shot, I'm going to let it run into next month's trade, right? I'm going to let it run into the next one. So it's not a basis of an entry, but as far as exit, if I know this month is compressed, I don't want to exit at this one because I know I'm going to undershoot. So I'm already going to go for the next. So that is correct. That is correct. So thinking about it psychologically as well as just technically, that's how I would handle it. So there's our commodities. We did some gold, right? Bitty, can't you see? Boy, Elon sure pumps the market, doesn't he? He did it with his own stock, and then he got in trouble. Then he started doing it with all these short-selling stocks. Now he's pumping Bitcoin. Guy's a little crazy. I like crazy, though. I like crazy. Okay. On what are your thoughts on doomers saying that we're in a bubble and a crash is coming? They predicted 9 of the last 3 recessions. So remember, I know the future, which means when things start to deviate from that, then I know something's wrong. Okay. How do I know the future? How could I say something so outrageous? Well, I do the analysis and I look at things like the central banking policy towards the analysis. Remember, they're analyzing the markets. I'm analyzing the markets. We got the same data. So, and the Fed actually comes out and tells me what they're going to do in regards to that. Okay? So the Fed's already told us the next 5 years. Okay? Okay? You see that? So That's all in play. So what do other people do? Probably not the same work I do. Greg says, hey, has my Harvard education statistically improved your trading results? Well, I already knew how to trade fundamentally and technically before Harvard. So getting, multiple degrees in economics and finance, did it help me in my trading? No, but I hope it made me a role model to my children. And that was the whole point of going. But I already knew. But it was fun. It's nice to formalize. See, before people would say, well, how do you know fundamentals? And I'm like, well, I studied. They're like, that doesn't mean anything. Now someone else says, well, how do you know fundamentals? And I have a master's degree in macroeconomics from Harvard. And they're like, okay, you're an expert. See, before I was talented, but not an expert. It's right. You're not an expert unless A, you've written a book, or B, you have a degree from Harvard. If you're a degree from Harvard, nobody even asks you another question. You could ask me medical advice, My belly button sticks too far out. Wayne, what do I do? Oh, let me tell you, I'm from Harvard, right? So that's the nice thing about that degree. But has it made me a better trader? No. Okay? But Craig, imagine we're out there trying to raise money to start a fund, right? There's always a sales pitch in raising a fund. Right? It's a sales pitch. And one trader is going to get the money and the other 3 or 4 or 5 or 10 are not going to get the money. So to go up, let's say we're on stage and I say, well, I have 20 years of experience and a master's degree from Harvard in financial management and a bachelor's degree from Harvard in macroeconomics. It's just it's just enough to be more. Right? It's just enough to be more. Ultimately, it doesn't make me smarter. It shows that I do the work. And that's a hell of a thing. Okay? 99% of the people that applied to get into my program were rejected. So it was actually less than 1% that got into my program. And of the people that got into the program, only 50% of them graduated. So 1/2 of 1%. So what does that say? I'm too stupid to give up. I'm too stupid to quit. I did the frickin' work. I got my A- average over 5 years. Okay, so you're like, okay, he's a hard worker. That's what it tells you. All right, cool. So anyways, let's go back to the biddy, right? We're already on next week's plan, looks like this. Okay? I probably think the conservative target, because remember, this is actually now stretched out. So this was supposed to be the maximum expected, was this double top. So now we're through that, and what you want to think is role reversal. Okay? 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 You see it? Remember, it's not my opinion, it's just technical analysis. So, if you're a bull, that's what you're going to look for. And of course, you're going to pray that Elon comes in and pumps it up again. Okay? Pump it up. So there's your Biddy, your Brent, your Goldie, your WTI, my oh my. We'll go over to exotics. Nothing has happened on my 2 Euro ZAR trades in a week except I collected interest. Remember, I told you we are moving into a period. Okay? So in here I said I'm short, but I know it's going to turn mediocre soon. Okay? Right? Do you remember that? I said I'm on this because in the month of January, I expect Euro to weaken. So I'm going to trade Euro ZAR because I'm really just buying ZAR. I'm buying Rand. But we're going to hit a point in time in which this will turn mediocre and I want to sell USD Rand because I think by March USD will be the weak one, not the euro. So I'm playing both sides of the rand. So now I'm benefiting from a carry trade because this has done nothing now in a week. In a week, it's done nothing. Sound like Jerry Seinfeld right there, right? So in a week, it's done nothing, but I've collected 250% annualized interest over that period. Cool. Okay. And then let's see this one. How are we doing here? Okay. And I'm still short this one. So I'm up 950 pips right now. 950 pips! Woo-hoo-hoo-hoo! Woo-hoo! Nice. Okay. So I'm in this rotation now. Remember yesterday I was talking about the rotation out of euro and into dollar. And so far so good. So euro dollar's done nothing. Remember that? Euro rand has done nothing, and now it's this one's turn. Cool, right? Yeah. Yeah, the carry trades, you actually want to move slow. Right? You actually want them to move slow because the pips are worth a bajillion, million, billion times more than the interest you collect. But dude, 250 to 300% annualized interest is nothing to laugh about, right? It just shows you how much the pips are worth. Okay, so that's that. Peso, triple top, lower low, lower high, working out. So the next part of this move is this sucker. Okay? The challenge that it's being given right now, the challenge it's facing, is that monthly pivot. So that's a biggie. That's a doozy, right? So we know the two most important pivots on this chart right now are this one and this one. Okay? This is why you want to sell high, not in the middle. So you could either be short up there, right? Or right here is the easiest, most logical one as a bear. The problem is we don't know because the technicals still show this. And you'll notice now that's the weekly trade plan. You notice that? That's the weekly. I mean, it's really supposed to stay above that, so we'll see. If there's a bounce, it could be important on a weekly basis. In that case, we stay in the range. Okay. All right? Now, if you're bullish on global macroeconomics, you are looking at it like an old man easing into a hot bath. Okay? So again, you're going to have to filter out the noise with your bias. That's what the bias does. Better, I think. Okay? You got it? So you have to ask yourself, What do you think? Are you going to trade it like this, and like this? Then if so, you either love Mexico or you're betting on global macroeconomic expansion. Any questions? Thank you for clicking the like button. I appreciate that. All right, so we got that. We're all good here. Nice. We can check like, so like $22 in interest, $7, and this one I'm earning, what is it, 40 cents a day. So not a lot of money, right? Calc. Let's pull up the calculator. 40 cents a day, or let's do 0.39 cents a day times 365 days in a year, $142. And if we go, oops, not that one. If we go back to this, on average, so I have 342 divided by 3. Right, so now we go clear. 342 divided by 3. So on average, $114 over $142 a year. Okay, so it looks like I'm earning about 80% a year. 80% a year on my USD Rand. Okay? I'm earning 80% a year on a bond, essentially. Okay? Can't get too many bonds that are paying 80% a year. And if they are, they're probably not liquid, right? So that's pretty good. So I'm loaning South Africa money at 80% a year. And says, can there be yen strength in early February? Well, we know between now and the middle of March, the yen will be strong. We already made that declaration. Again, I talked about that in yesterday's video. So you can take a look at that. But yeah, could it happen in early to middle of February? Yeah, almost certainly, in fact. Roger says loan sharking. Yeah, it sounds like it. It's not, though. It's just because I'm leveraged. So it's not actually loan sharking. I just happen to be leveraged. So it's an IRR, not an absolute percentage. Okay? So when you loan somebody, you charge them, 3%, right? But my IRR is based on the cash that I put up times the leverage, right? Times the rate. Okay, and that's going to get my internal, because IRR tells you per dollar at work. So it's not really loan sharking. I'm a nice guy. I'm helping out South Africa. In today's special meeting, so everyone in my swing trading group is getting access to a live training course on macroeconomics. And today I'm going to dangerously compare South Africa to Israel. And I know it's dangerous for all kinds of political reasons, and I hope you can withdraw all the political baggage. I was going to compare Canada to Argentina, but then I'm like, oh, everyone's going to say, oh, Argentina doesn't really count because it's something there. And so when you go through all these different things, there's always a reason why you don't want to do it. Usually for political reasons, not economic reasons. And I'm an economist. I understand the politics. So if we can get past politics and say, oh, yeah, but, right? So like South Africa has faced generations of systemic racism. Okay, I get that. Israel receives billions of dollars from the United States in the form of aid. I get that too. But so I'm going to compare these two economies, and it should be fun with the hopes of having a positive educational experience. Okay, and they're very different economies, and that's the whole point. All right. Yeah. Dangerous, right? My wife's like, you shouldn't do it. I'm like, that's exactly why I'm going to do it. Yeah. All right. So if you're in my swing trading group or in the professional track with Ryan, I'll see you at 2 p.m. today in the war room. Daniel says, Wayne, at what point would you recommend a trader to resign his or her job and become a full-time trader? Well, I can't recommend to you, but I remember the thought process that I went through. I had to make significantly more money as a trader than in my job. So being a venture capitalist was one of the only actual jobs I've ever had. That means I earned a salary, plus bonuses, but I earned a salary. I earned health benefits, and because of all of that, there was security involved, meaning if I felt sick today or if I felt tired today, I'm still going to collect a paycheck. As a currency trader, if I feel sick today and I can't work, I don't get paid. Okay, that kind of stuff. And I certainly don't get health insurance and benefits. In fact, in the United States, you're penalized for being a small business owner. To say it differently, in the United States, you get screwed if you're a small business owner in the form of health insurance and health benefits. Screwed royally. Anyways, so to add that up, those are costs and risks. Okay? So now you need to make enough money to compensate you for those risks. And that means you need to make far more money as a trader than you do as an employee. So Daniel, right, reminds us that I say never withdraw money onto your trading account. Right. So here's what you need to do. Stay employed for as long as possible. Get very, very good at swing trading and position trading and stop focusing on day trading and scalping. Forget that. You can do it later when you can sit in front of your charts all day, every day, and you got nothing better to do. Okay? But in the beginning, if you need to know how to swing trade and position trade. That means you're going to need to know technical analysis, right? Patience, discipline, and have a fundamental bias, because you won't be able to have any consistency if you don't know those other things. So it sets you up really well. Meanwhile, you collect your stupid paycheck and you keep trading your time for money. But at least you don't spend your cash. Right? Okay? And then at some point, you're so good and you've built, let's say over 5 years, you built such a good track record, you decide to trade other people's money and you raise enough money with your track record that you can at least now quit your job, and the money you earn as a money manager will compensate you for the efforts you make on someone else. They will compensate you for the value you create. Meanwhile, you're spending your performance and your management fees on yourself, and you're not touching your own account. So you got your account and your client's account. You're earning money from trading their accounts, but you don't touch yours. That stays in the house account. and you continue to grow that. Okay? I happen to have enough money where when I quit my venture capital job, I had enough money. What can I say? So I could cheat time a little bit, right? But again, if you're doing 5% a month, compounding for 12 months, you get pretty close to 100% a year. So you go year 1, 2, 3, 4, 5, 6. No, let's do this better. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. These are years now. Now let's say you start with 10K. Then it goes to 20. Well, wait. That's not right. You have to start in year 0. Sorry, I forgot my finance. So you start in year 0. You put in $10,000 into your account. So at the end of 1 year, you have 20. Then you have 40. Then you have 80. Then you have 160. I'll dumb it down. We'll just say 300 here. Then we'll say 600 here. And then we'll say 1.2 here. And then I'll dumb it up to 2.5. You have 5 million. And then in year 10, you'll have $10 million. Compound interest. You can turn $10,000 into $10 million in 10 years. Okay? Of course, that's difficult because 100% a year is ridiculous. But most of you guys are trying to make 25% a month. So I'm asking you to dumb it down, dumb it down, dumb it down. But that's where you want to get to at some point, just this logic of the part that makes you lots of money is not spending your money for 10 years. So how do you trade your account without spending your money? You find other sources of income. You get yourself a side hustle. You can work nights and weekends in the beginning, and then you finally get out of that because now after 5 years of doubling your money every year, you're going to attract someone to invest. And now you get to the point where you're charging 20% performance fee plus 2% management fee, and that offsets you for your stupid day job. And meanwhile, you live off that, and you deprive yourself of your yellow Lamborghini for 10 years. Okay? So in here, you don't make much money anyways. Who cares? Then in here, you're becoming a professional. And then in here, it gets really interesting, right? Because somewhere in here, by year 10, you decide you don't even want to trade other people's money anymore, right? It's too much work, too much effort. Okay? So my point here is you could probably do okay only doing 50% a year. And so many people are focused on getting rich quick that they forget that the real money is made on the long term. Okay? All right. So anyways, let's move on to USD and then do some yen. So what do we know? We know January is probably down. We know there's going to be some up in February, maybe back down, and then up in here. And so far, so good. Okay? We took this even a little bit further. If you remember, January was down for 3 weeks, up on a false rally, then back down. Okay? Then the up should appear, the down should appear, and then the new up should appear. That's what I'm thinking, a big W rally. Okay? Right? Oh yeah, Marina, I didn't need to, make a comment that my way is better than your way. I'm giving general education to an overall market, right? We're dealing generally with a get-rich-quick attitude, and I need to challenge that over and over and over again. Okay. Okay, so that's that. There we go. Very nice. Quite right. When we get to about 2150, it'll be 2 standard deviations from the mean and probably want to revert. That's what that tells me. But really, what we know is this looks like a counter trend, and we're expecting a high here, don't we? So I would take it almost 3 standard deviations from the mean, and then I'd bring it back down. Okay. A lot of this is wishful thinking, and I want to remind you of that. I want that to happen because I want the double bottom so I can trade it long term. So some of this is technical analysis and some of this is wishful thinking, and I want to be clear on that. Yes, Master Trader, the typical model for professional managers is 2% annually plus 20% performance fee. And like everything else, everything is negotiable. Typically what happens is you talk to some guy and he says, oh, I got $1 billion. I got a giant boat. I drive a Ferrari. I have 5 Ferraris. I have houses all over Europe and the Middle East. I'm a baller. And then you're like, well, give me $1 million. And he's like, whoa, 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 whoa. And then you're like, yeah, I'm going to charge you 2% management fee so I can pay for things like compliance and not have to gamble for it. And he's like, well, I don't want to pay the 2%. I'm like, you're an idiot. Screw you. What can I get for $2, eh? Nothing. For me, anyways. All right. Okay. I do want the up. So to put all this together one more time, the up is predictable and expected, and then I would like a down so that then I can take the next up. And the next up, I'd like to stay in for like months. Okay? That's what I would like if I were me. Yep. What if it doesn't come down? I don't want to talk about that. Yeah, well, that's why, like after non-farm payrolls, for example, we actually did talk about it where I have to kind of buy dips as long as it's still bullish on this shorter time frame, knowing that I'm almost certainly going to break even in my mind, but I might get lucky. So I don't want it to go straight up. I don't want it to be a V-shaped reversal. But then again, I don't expect it to be either. So it's just like, I don't know. You got to almost like day trade your way up. And as soon as the day trade market turns bearish, you stop day trading it up. Okay? And so it's complicated because you're mixing strategies, and that's right. So if it does this, then stop day trading. Because I expect it to come all the way down, right? So that would be next week's swing. So like, it's only Tuesday, but by Thursday, I might be shorting euro dollar again, so that by 2 weeks after that, I could be buying it. Or I could just ignore it. But yeah, I can't sit here, Daniel, and say, I want to be a bull on euro dollar, but I'm not buying it because I think there's going to be a double bottom first. Say, I can't do that. I can't, right? Now I'm talking myself out of good trades. Even though I expect that, the way to do it is to try to take these trades and manage it like it's going to come down, but it might not. So you're taking these shots and you're managing these risks. So how do you do that now? Well, I understand that this is a counter trend trade on the monthly, right? We all agree with that. This goes back to Friday's non-farm payrolls presentation. Okay, that euro dollar was going to go up simply based on a monthly out of position counter trend trade. Okay, so therefore we have weekly up as well. Okay, so now we have weekly up on a counter trend monthly. Okay, so now I have to go weekly, daily on and stay mentally focused on the monthly. So to do that now, I would do like daily. Well, first of all, let me do weekly first, and then show you how I fold in the monthly. Okay. So let me update this. I got to go to my indicator. I got to open my, and I'm going to add this. This gives me my conservative target as well as my aggressive. Okay, good. So for the week now, we think it could go as high as this level. Okay? And a bull is going to look at something like this next week. What I'm proposing is we do this and then expect that. Okay? So up daily for a couple more days, and then down, up, down the following days. Okay? You following with me? All right. So now you go day trading, and you got to do that on a daily basis. Okay? So you can do it this way and try to connect these. So what this tells you is we're already done today, of course. And so tomorrow you're going to buy it here, take it up there, and that's pretty close to our target, isn't it? So this is why I said on Thursday. So now we're doing Thursday. This is Wednesday. So now we're on Thursday, but I already talked about Thursday. But now let me put it in context of technicals. We get the counter trend this way, which then sets up next week on Friday. So then it does a rallies up on Friday. I've run out of room here. Actually, I could probably squeeze this in. Okay, Thursday looks like this. Friday looks like this. Monday looks like this. And we start working our way back down here over the course of next week, in which I will slowly start tiptoeing in long down on here. But we're so many days away from that. Okay? But I have to keep all this in mind. So on a daily, you'll miss all of this. This is a monthly counter trend because we opened here OOP. So we have an OOP into a CT. The CT means we head up to the central pivot point, which is somewhere around here. Then I throw in the weeklies, and the weeklies say, exit here. But we already have this CT telling us to exit there. So now we have two things: the counter trend into the central, the weekly into the pivot profit zone, and then my seasonality tells us I want to buy it down here. So now I have to combine all of that and then get next week and part of next month into this so that therefore I can then buy it. So I will have to then day after day after day kind of fit all these little pieces together and say, okay, maybe I buy this, maybe I buy this, maybe I buy this, maybe I sell this, and then I definitely buy that. So this will probably take 3 weeks. Theta says, why is seasonality disconnected from fundamentals sometimes? Well, they're totally two different things. So it's not fundamental. So I would argue that I think the seasonality of it would almost always be disconnected from fundamentals because they're not even related. Brinsley says, I want my double bottom so I can buy it. Yes, because I already told you I want to be long for 5 years. Okay. Now you have to do all this on euro dollar, but you have to do all this on like Aussie dollar and Kiwi dollar, pound dollar. Okay. Because one of those will probably work better. Okay. So now we're looking at an overlap of monthlies and weeklies. Okay, and this just simply says up. There's nothing interesting or complicated about this trade at all, except it's having difficulty because Kiwi and dollar have been strong and weak at the same time. Once again, sort of a seasonality issue, but this is very clearly going up according to technical analysis, as well as fundamentals. It's pretty clear. Okay. So this week you can see we have an S1 bottom, which predicts an R1 top, which we got. So we're already kind of looking at next week. Next week's probably going to be like this. Okay. So once again, it's Tuesday. I'm already thinking about what I'm going to do Thursday or Friday or Monday. Okay. Hunting Bear says, do you ignore Mondays for trading? Absolutely not. Why the heck would you do that? My gosh. No. But so I don't know where you got that. But I do remember one time I went to a Barnes & Noble because Amazon.com didn't exist yet. And I went to a Barnes & Noble, and I remember trying to find a book on Forex. And there weren't any books, and then I found a trading book on trading in general. And I do remember someone saying they either didn't trade Mondays or they didn't trade Fridays or something like that. But no, it's ridiculous, of course. Okay. Though some people are so technically focused that if the indicator doesn't tell them, they don't know what to do. So therefore, there are certain situations where they just can't behave because the indicator hasn't triggered yet. So they're like, I don't know what to do here because the candle isn't closed. Like, really? So I'm much more fundamentally biased. So I know what I want to do 4 months from now. I know what I want to do 9 months from now. Okay? So I can plan ahead based on that, right? So I trade heavily on Mondays and Sundays. Sundays I heavily trade. Fridays are probably my least traded days because it seems like there's a lot of like Wednesdays and Thursdays are profit taking days. Thursdays are often front runs. The Fridays can be front runs too. I'm okay, but I'd rather take a Thursday than a Friday. Sunday, I love trading Sundays. Mondays are great because you already know what your weekly plan is. So if your day trade doesn't make any sense to you, well, I got my weekly and my monthly trades. So to me, there's so much information that I would never give up a Monday. It doesn't make sense to me. But if you only have this one thing and it's all technically based and you don't have a bias and you don't know what to do because nothing has happened yet, so you have no indicator to tell you what to do, then yeah, you're stuck. But I certainly don't trade that way. Okay? because I'm fundamentally biased, I can say that I'll look at a candle that hasn't closed and I can make a prediction and say, well, it's going to close bullish, so I'm going to take it north. Now, why would I say that? Well, I'm fundamentally bullish. And so I'm just going to say, well, it hasn't closed yet, but, I can see my role reversal here, so I'm going to take it long. And I'm going to ride it in tomorrow's, well, this is actually next week, right? Into next week's zone. Okay? And this goes to answer Maida's question earlier. What do you do on a compressed week? In this case, a compressed week, I'm going to use next week's target. Okay? Not that that's compressed week, but just as an example. Okay? So we know this is here, we know there's there, and then I'm going to probably buy here actually. So, so somewhere between 72.20 and 72. If I was a bull, I'd be a buyer. Okay. Now, if you take it further, that's daily. If you take it further now and check out hourly, you already missed it. Okay. This was your entry. Now, you'll say, well, look at the giant wick. Okay, yeah. See, somebody already had all this planned out. Okay? Somebody already had all of this planned out. That's why there's a wick. Cool. Was that helpful? Half of you have not clicked the thumbs up button. Half of you have not liked the video. Could I be so bold as to ask you to click the like button, please? Pretty please. Please. Please, will you click it, please? Thank you. Okay. Let's start with Aussie. Okay. Up into the R, down. If you're a bull, you're going to buy the dip, son. Okay. Kick it over here, baby pop. Okay. There should be some room. The target is 81.5 to 82. So there should be some room here. Okay? If not, that sets up an inside month. Okay? Now, the interesting thing about this, if it sets up an inside month, it's technically important because it's supposed to do what that black arrow shows. If it doesn't, it could be the beginning, and I would be forced to start planning for it. But if it doesn't hit target as it's supposed to, something's wrong. And what's wrong? Repatriation. That would be tax flows. Okay? And I might take that for a month. Okay? So remember, dollar was down and dollar was up in January and yen was down. And then I said what's going to happen next is dollar will fall and yen will go up. And they'll take turns. And by April, nothing happened. You just move one through the other. And from there, you'll start setting up your annual trades, right? The trades you want to do. Because we would have washed out and rotated everything that needed to be washed out and rotated. Now, then we go back onto our fundamental trading. Okay? Cool. Wow, nobody clicked the like button that hadn't already. No one new clicked the like button. So 100 people heard me say it and then didn't do it. Interesting. Well, I apologize that I haven't earned that type of respect yet. Why don't I take questions then? If I'm not covering the right thing or answering the right questions, then let me know. So what would you like me to cover next? I was going to go through the yens. Would you like me to go through the calendar? Yeah, and what? But what I said is nobody knew. So it was at 150, and then I asked and it stayed at 150, but there's 200 and something people watching, right? Pound dollar, okay, yeah, sure, for sure. Okay, pig dog. Piggy pig. Well, let's go back and do relative strength. Pound stronger than dollar. Pound weaker than Norway. Pound stronger than yen generally, but right now weaker. Pound slightly weaker than euro. Pound weaker than Swiss franc. Pound weaker than Aussie. So the only thing I can tell you is the dollar's weak. And weaker than pound, and pound is weak. So pound is weak, USD is weakest. So what do you want to do? Like, are you looking to sell something? Are you looking to buy something? So I want to go back to what I said in the beginning. Okay. Aussie's lost some of its luster. Pound is neutral. Kiwi is neutral. Euro is neutral. CAD is weak. Swissy is strong. Dollar is weak. Yen is strong. There's not a lot of great trades in the moment. And they're short-term strong. Okay? So, like, the only decent one out here might be Aussie yen if Aussie turns north. I mean, Aussie dollar if Aussie turns north again. Okay? Or you can, right? But you see that it won't. You can see why it's stalled out. Like, it's supposed to stall out. So going back to the indices here. See, the indices don't tell you why. They only tell you what has recently happened. Now that you see we're at a pivot profit zone, now it totally makes sense. It's been going up, then it hit its target and stopped. Well, that's what it's supposed to do. So yen is fairly strong. And what is the weakest? I guess CAD yen short or CAD Swissy short would be the best trades in the moment. Okay. But now you're really searching, right? You're really struggling to find what you're trying to do. So clear this out. Okay. That's not a perfect entry. Okay. You're going against the trend right now, which is fine. We look like we're through this line. I can tell you what the target is. The target is down here at 81.50. Okay. I wouldn't sell it low if I were me, so I would look for something like this, and that would probably be tomorrow. Okay. CAD at support now, you're saying? Why? Because it's 82? Yeah, maybe. That it might be true, but I'm just looking at like this area, right? So down, up, down would be the plan. So probably tomorrow. So now you would look at this, day trade it. So you go template, day trading bearish bias. And there's today's entry and there's tomorrow's entry. Okay. So I'd let it go. And if it was meant to be, if it was meant to be, set it free. Set it up for tomorrow. Abel says it'd be nice to take on Argentina and Canada. Well, the reason I started with that one is in 1920, Canada and Argentina had the same GDP. Canada's gone on to be one of the richest countries in the world, and Argentina sucks. Beautiful people, beautiful land. Bad politics, bad decision making. Okay. I blame the socialist pig dogs that took over Central and South America. But nonetheless, they made poor decisions. and now they're suffering from it. They should be as rich, if not richer, than Canada, but they ain't. Cool. Well, Highlander said, that's bold. What's bold? What did I do? Okay. Well, Theta, what do you think? Will that drive massive investment into England? Okay. So you guys, one of the topics that I want to address is that economics is a social science and that there are choices to be made. The United States, Canada, New Zealand, Australia, Belgium, the Netherlands, the UK, France, Germany, and the Czech Republic. I'll throw in Czech Republic. And Italy and Greece. Okay, we'll throw all of them in. Democratic capitalist economies. But they have to make choices. How do you want to handle this? How do you want to handle that? And they make choices. And from that, you get different consequences from those choices. That's all it is. Socialism has never worked in the history of the world. It's a great sales pitch. I'll give you money for nothing if you vote for me. All right. It's stupid, but I understand it. It's stupid, but I understand it. You don't like paying rent? Paying rent sucks. The landlord makes all the money and he does nothing. That's what Marx said. Okay? Karl Marx, that's what he said. The number one thing Karl Marx hated was rent. Okay? So you have to make choices. Choosing socialism is guaranteed failure. The second thing is, if you choose capitalism, you choose to survive. Now, what form of capitalism do you choose? How do you collect taxes? How do you redistribute the income? What should the role of the government be? Right? I should throw in Hong Kong as another great example to throw in there. Hong Kong is very much more capitalist than the Czech Republic, for example, maybe, right? Or Greece. So they all make choices and there's consequences to the choices. Are they good? Are they bad? Well, that's not for me to decide, but choices are being made and consequences are carried out. Okay? So then we're going to cover some of that today, and from an economic point of view, not from a political or social point of view, but from an economic point of view, what are the choices? And not even all the choices, but like as far as productivity and stuff, what are the choices? And what can we look at as far as comparison? Now, also the way I've been teaching people is I've been teaching people how to just go and get the data themselves. So you can say, Wayne, I really, really, really hate the idea of you comparing Israel to South Africa. Okay, fine. Not my problem. It's your problem. Okay. I just took two economies. Now I picked them for reasons, but if you don't like those and you'd rather compare Canada and Argentina, great. Go do it. And if you'd rather compare two other countries, like, I guess I could do Taiwan instead of Israel. If Israel's too politically sensitive for people, I can say, well, let's use Taiwan. Okay? And South Africa. Okay? Whatever. You should be able to compare all you want because I'm trying to teach you how to do your macroeconomic analysis. So the whole point is you can do whatever you want to do, compare whatever you want to compare, look at the data in any way you want, interpret it any way you want, make it any kind of decision you want or are capable of, and right or wrong, you'll still probably make money. Because at least you thought about it and you came up with a plan. And when the plan is obviously correct, you're going to trade. And when the plan is obviously not correct, you're not going to trade. Or you might be mentally deranged. And that is going to be difficult for me to address as your YouTube mentor, right? But anyway, so I just covered relative strength. Again, that's 2 days in a row. And do you see how important it is? Most currencies right now are not really moving that much. This one is rocking and rolling. There you go. Okay. Morena says South Africa and Argentina the same. Maybe on the political side, right? Or on the improvement side. But, like culturally, it would be... See, I'm not trying to compare culturally anyways. The reason I'm comparing these two is that society in each one of these economies has to choose what to produce. For example. So anyways, I'll save all that for this afternoon. I don't want to burn myself out because I think about these things. I talk to my wife about these things. I'm like, hey, I've decided to compare Israel to South Africa. And she's like, oh my God, don't do that. And I'm like, no, I got good reasons. Let me tell you. These are the reasons. So anyways, like I think about these things. I've been working on these things. They're on my mind. I dream about them. I dreamt about them last night. So hopefully it's a rewarding experience for you and not a disaster for me. Right? So, cool. All right. Give me another one. Let's go. We got a couple more minutes. We got a few more minutes. Let's go. What else do you want to talk about? Let's get on with it. Thank you, Keefe. Master Trader, do you? No, Danny. Nope. Not in the least. Not in the slightest. Let's do... Go back here. Jamie or Jaime says, Wayne, you said you seem pretty sure the dollar is going to weaken. Oh, no, I'm certain that that's what I want. I don't know if it will happen, but I know that is what I'm setting up. Now, why? Because I'm fundamentally biased. I did research. I studied macroeconomics for multiple countries, and I have opinions about the Chinese economy, the Japanese economy, the South Korean economy, the Canadian economy, the Australian economy, so on and so forth. I am biased about those. From studying economic data in those countries, I also therefore interpret that their central banks are probably looking at this data too. And because I understand what they're trying to achieve, I can guess on what their near-term monetary policies will be, as well as I keep an eye on the fiscal policy of these governments, like, for example, the United States. Cool. So taking all that into account, I make a decision. Okay? So now I've made a decision that I am a bear on the US dollar. Or at least when the dollar's weak, I'm going to sell the hell out of it. And when it's strong, I'm going to back the heck off. Okay? So at least now I'm controlling my behavior and I'm not swinging both ways like a broken gate. Then I look at 20 years of seasonality data, as well as 20 years of personal trading experience. And I just feel it's too early now, but I'll be conservative now, but in a few weeks I'll be much more aggressive. So how is it that I'm pretty sure the dollar is going to weaken in March? That. Because I've done a ridiculous amount of work. Ridiculous. So, Jamie, those that are in my FX Bootcamp swing trading group, some of them are now phenomenal fundamental and technical traders. Phenomenal. And some people are brand new. But that's why I have a group, so I can teach you these things. So right now I'm teaching people macroeconomics, a college level course on macroeconomics. Okay? So the thing is it possible for us to make such decisions? Yes. It's like a major reason why I'm here every day. I will teach you that. Okay? Yeah, my goal is to give you a Harvard education for $99 a month. All right? A little bit cheaper. Okay? So like today, we are going to cover the production possibilities curve, sometimes known as the production possibilities frontier, because economies at a social level have to make decisions and there's consequences to those decisions. Oh, so let's put that on a chart. Okay, so yeah, you're going to get to that point where you make these decisions. So yes, and it's also why I make declarations 2 weeks ahead, 2 months ahead, 8 months ahead, because yeah, that's the kind of work I do. Technical analysis only puts me in and takes me out of trades. But I already know what I'm going to do before the technicals even show up. Technicals only tell me the right price and the right time, but they don't tell me what to do. Okay? Oh, the macroeconomics videos will eventually be posted at FX Bootcamp for all members. Right now, it's for people that attend live. Because I'll probably redo the whole thing again in the summer. Do I record the live groups? Absolutely, totally, yes. Then we do a lot of group work in the swing trading group. We do lots of group work. Can you advise books? I've never read a book on Forex. So I don't know if that's 100% true. I might have read 2 books. But I don't know if I have recommendations. So my programmer is out of the hospital. He's recovering from COVID. So hopefully we can, and apparently Algerian hospitals are probably not that great. Right? So hopefully we can get the book club up and running at some point soon. You're from South Africa? Half the people in the room is from South Africa. Welcome. Yeah. Steve, you bought my book? Oh, Wiley Publishing's going to be so happy. And by the way, thank you, Maida, for everything you do to help. Wayne, do you use the default settings that come with zigzag? Probably not. Rookie says Singapore currency will be a major currency one day. Well, technically, it's probably 50% a major currency. So the South African, or sorry, the Singaporean currency is a basket of currencies, and it's heavily pound weighted. Now, nobody knows what's in the basket, but if you look at the correlations and stuff, I think you'll come to a similar decision that there's a lot of pound in that basket. Okay. Well, Wayne, what should I study to improve my fundamental analysis besides central banks? There is nothing else. Central banks interpret economic data and then set a monetary policy. The monetary policy directly impacts the value of the currency. So there isn't anything else. How do you have the index on MT5? We are developing that, and it will be released soon. We're going through every chart, every indicator, every profile, and developing everything from scratch. Do the major banks manipulate the currency market? Or is that just a myth? It's a complete myth. It's stupid. Jamie Dimon at JP Morgan doesn't wake up in the morning and say, I want to manipulate the currency. I think he wants to create shareholder value. Drive up his stock price. I think he wants to put his other competitors out of business, but it's ridiculous. Okay. Yeah. Yeah, 1.5 billion might move Bitcoin, but it's not going to move the dollar. Thank you, Stevie. It's both, Willie. Right? The only trades I have open currently are these three, and I'm just about to tickle over 1,000 pips. Look at that. Come on, hit 1,000. Yeah. Oh. Thank you. Thank you. Thank you very much. Thank you. Thank you. They're just swing trades. Boring little swing trades. Yeah. Oh, yeah. We hit 1,000. Woo! Greatest trade in the whole world. Actually, they're just swing trades. Yeah. Thank you, Daniel. All right. I'm hungry. I need to go spend all this money. So yeah, 3%. Yeah, but see, I'm supposed to be doing this. I mean, they're just swing trade guys, right? Nothing exceptional. All right, cool. All right, so peace on earth. May the pips be with you. May your profits be above average. Thank you for being part of the Forex.Today community. Thank you for being a client of Trader's Way. Thank you for being a student at fxbootcamp.com. Thank you for the loyalty and respect you show me every day, and the 2 hours of your time that you've invested into this webinar. I hope it was well worth your time. Please leave comments in the recording, which will be available in about 2 minutes. And I will see you on Wednesday, on Thursday, and on Friday if you're a subscriber of Forex.Today here on YouTube.